Talk about a market getting pulled in a bunch of different directions. On one hand, you have these old-school global tensions flaring up. Then, you've got a report card on how we're all doing with our spending. And bubbling right underneath all that is this massive, multi-billion-dollar bet on the future of AI. All right, let's get into it.
Okay, so let's get right to the numbers. On February 19th, the market just kinda took a breather. The Dow Jones Industrial Average, which a lot of us watch, closed down over 0.5%. Not a huge drop, but it was enough to break a nice little winning streak it had going, which definitely signaled a shift in the mood for the day.
And yeah, it wasn't just the Dow feeling the pressure, the S&P 500, the one that gives us that much wider view of the economy, it was down too. And that's how you know this wasn't just a problem for a couple of big companies. That nervous feeling was kind of everywhere.
You guessed it, the tech-heavy NASDAQ followed right along, ending the day in the red. So what happened? After a few good days, what suddenly slammed on the brakes? Well, it really boils down to two big things: some trouble brewing overseas and a dose of caution right here at home.
First up, global tensions. This is kind of a classic market mover, right? Headlines about the US and Iran started getting serious, and investors did what they always do when they get nervous. They went risk off. That's just a fancy way of saying they pulled money out of stocks and started looking for safer places to park it.
So where did all that money run to? The usual suspects, oil and gold. Brent crude oil shot up over $70 a barrel. And you know what that means? It hits us all right at the gas pump. At the same time, gold prices climbed. It makes sense, right? When the world feels uncertain, people want something solid, something real they can count on.
And here's why everyone pays so much attention to this one little spot on the map: the Strait of Hormuz. Think of it like a major artery for the world's oil supply. A full fifth of all the oil the world uses every single day has to pass through this tiny channel. So if that gets clogged, even for a little while, the whole system feels it, and fast. This analyst, Daniela Hathorn, really nails it. She said the tension is clearly feeding into prices. This isn't just some headline you can ignore. It directly translates to higher energy costs, which means it costs more to ship things, to make things. And yep, that cost eventually gets passed on to us for just about everything.
Okay, so let's pull back from the global stage for a minute and zoom in on something a little closer to home, like the aisles of your local Walmart. Because the second big story of the day came from them, and it gives us a fantastic look at how the average American shopper is really feeling. I mean, think about it. Walmart is the biggest retailer in the country, so their performance is kind of like a report card for the whole US economy. If they're doing well, it's a good sign that we're all out there spending. It's that simple. And man, on the surface, their report card looked amazing. Global revenue was just shy of $191 billion, that's up over 5.5%, and their online sales, a huge 24% jump. So clearly, we're all still shopping, still clicking that Buy Now button.
But, and this is the really important part, it wasn't what they did that worried Wall Street, it was what they said they were going to do. Their forecast for the coming year was, well, let's just say it was conservative. And when the biggest store in America says, hey, we think things might slow down a bit, well, that kind of caution tends to spread.
So you've got this one story about oil prices and grocery budgets. Today's problems, right? But at the exact same time, there was this other, totally different story playing out. A story not about today, but about the future. We're talking about a mind-boggling investment in the literal backbone of artificial intelligence.
What am I talking about? This deepening alliance between Meta, Facebook, and NVIDIA. And look, this isn't some new thing. They've been building this partnership for years. It started with a big supercomputer back in 2022 and has now grown into this massive multi-year deal for basically everything NVIDIA makes.
So you hear this term full stack. What does that even mean? Think of it like this. Instead of just buying a super fast engine for a car, Meta is now working with NVIDIA to design the entire car from the ground up. The engine, the transmission, the computer systems, everything. Why? Because they want to squeeze every single ounce of power and efficiency out of it. And when you're building these giant AI brains, you need all the power you can get.
And get this, the potential price tag on this partnership? A cool $50 billion. That is a staggering amount of money. We're talking more than the entire economy of some countries. It's just a monumental, all-in bet on the future of tech.
And here's the crazy end goal. Meta wants to have more than 1.3 million of these powerful GPUs running by the end of next year. This isn't just about making their data centers faster.
They're trying to build what they're calling personal superintelligence. Imagine an AI assistant that's not just a gadget, but something that actually understands you and can help with real, complex stuff in your day-to-day life.
Okay, so let's put it all together. What does this day in the market really tell us? You've got the messy, complicated reality of right now colliding head-on with this incredible, almost science fiction promise of the future. And it's all happening at once.
It's like the market is in this giant tug-of-war. On one side, you have these very old-world problems pulling it back, things like oil, shipping lanes, and what a gallon of milk costs. But on the other side, you have this massive ambition pushing it forward, this race to build a future powered by AI. It's a real battle between yesterday's worries and tomorrow's dreams. And that's really the big question this leaves us with, isn't it? We're spending these unbelievable sums of money to build this incredible digital future. But at the end of the day, how much is that future still going to be tied to the gritty realities of the here and now? Things like oil, conflict, and whether or not you can afford your next trip to the grocery store.